So during recent days we are working out the problems which are related to GST and liability. Today also we are working out similar kind of problem. We'll see this particular problem, today's problem. Here the things whatever are given here we will discuss. See here, total sales, it is 36,72,000 is a total sale, which include some of the items. Now we have to see those items which are not supposed to be included but still it is included, then we have to deduct them. Which are supposed to be included, which are allowed, we are not doing any adjustments. First one, see there, freight. In normal case, when freight is not included, we are supposed to include, we are supposed to add freight charges, but here you can see it clearly, freight is included. See, it is given there, the above interstate sale includes, freight is included. So when it is included, we are not going to include it again or we are going to deduct it again. It is already added, we are not doing any adjustment with this. And remember, it is an interstate sale between two states. Yes. Next, deposit of returnable container. See, when we are doing all additions and deductions, under deduction sector there is one deduction called, two deductions will come, returnable containers and one more is trade discount. Now that amount is included here, that is not supposed to be included, alva. So we have to deduct this particular item. So for first adjustment, for first item freight there is no adjustment, but for returnable containers we are supposed to deduct them. Next, here you can see transfer to branch. Transfer to branch is allowed, we are not doing any adjustments regarding this. Packing charges is supposed to be included in the assessable value. So already it is included, right? So when it is included, again we are not going to do any adjustments. So here till here only one adjustment, that is returnable container adjustment. Returnable container we are supposed to deduct, add alla deduct. Next, further, the above sale amount, the dealer has deducted the following. Kelavel item deduct madidane. So we have to see now whether it is allowed. If it is not allowed, it is not supposed to be considered, then we are adding them. If it is allowed, we are not doing any adjustment. See there, first one, turnover relating to goods worth rupees 10,000 excluding taxes covered by invoice number 745 dated 1/4/19, which were returned on 1/10/19. See, this particular transaction, what we have to do, whether we have to it is, see, deducted when the sale, some return is done after 6 months, so we are not considering this. So it is deducted in the sense he has done correct. Yeah, he had done the work correctly, so we are not doing any adjustments regarding this particular item. Goods worth rupees 10,000 covered by invoice number 856 dated 13/4/2018 were rejected by the customer and the dealer received it back on 14/10/2018. See, now the item is rejected but after 6 months. So any item which is rejected after 6 months, we cannot see, it is deducted here, so we have to add whatever he has done. Deduction is wrong, so we are adding. So first item we are not considering, second item we are considering. So measures Vasudha deals with only one type of commodity which is chargeable at 12% in Tamil Nadu. So remember, it is a interstate transaction. So Tamil Nadu tax rate is 12%, so that itself is our IGST. So we can calculate the amount. We have to calculate taxable supply as well as tax liability. So what we have to do, 36,72,000 which is to be adjusted with one deduction, one addition, that's it. One deduction is returnable containers, one addition is rejected goods. So we will arrive at tax liability. So we'll see the solution. So this will be our solution. See, total sales, that is 6,72,000, which is reduced by deposit of returnable containers. In normal cases also we are deducting, so that is included in the sale price. So that's why we are deducting 2,40,000. One addition we have to do, that is rejected goods after 6 months, that is rupees 10,000. So when you adjust them, you will get 34,42,000, on which 12% GST we are supposed to calculate. So 34,42,000 into 12%, you will get 4,13,040. So this is our GST payable. So problem is very simple, only the concept is we have to understand. You can expect these kind of problems for section C for the Mangalore University examinations. We'll work out one more problem. See, from the following information, compute the value of taxable supply and IGST payable by Mr. Ramchandra, who is a registered dealer in Bangalore. So the information is given to us. From the available information, we are supposed to calculate the amount of IGST payable. One more simple kind of problem we'll see. See, gross amount received is given. So total amount received is given 8 lakh rupees. Now what we have to do is, if any items which are included in this are disallowed, then we are supposed to deduct them, or else if none of the items are disallowed, on this amount itself we are going to calculate taxes, SGST, then IGST, all those taxes we are going to calculate. Yes, now IGST is asked, but we will calculate both of the things. We will see the things. First one, gross amount received, I told 8 lakh. So if any interstate transactions are there, then IGST we will levy. Intrastate transactions are there, then GST and CGST we are going to levy. Yes, gross amount received by the dealer is 8 lakh, already we have seen. Sale of goods outside the state included in the gross gross amount 50,000. So see here, this one item called 50,000 which is outside the state. Remember this is outside the state. Well, yes, we'll consider them outside the state. Outside the state, we will consider it as outside the state. 150,000 is there. Then sale of goods in the course of export outside India. See, export outside India will not come in our calculation. It will not attract IGST or SGST, nothing it will attract. So from 8 lakh we are supposed to deduct this 1,50,000. Remember, 1,50,000 we have to deduct. Sale within the state, see the next item, sale within the state, 1 lakh rupees. For this 1 lakh rupees, SGST and CGST is applicable. Cost of freight and installation charges charged separately. See, charged separately but included in the gross amount rupees 5 lakh. Rupees 5 lakh include agide. So we will consider it. Next, subsequent sales in course of interstate sale. See, interstate sale. See, it is outside the state. This is interstate. So you have to consider these items. Interstate sale of rupees 1,95,000. So all these informations are essential for us. So interstate transaction means it is between two states. See, this is interstate, this is interstate. Remember these things. Sale within the state is 1 lakh. So out of this 8 lakh, 1 lakh is within the state, remaining all is outside the state, whereas one item included is export outside India. So based on this information, we can calculate the things. Rate of GST is 18%. So how we are going to solve this problem is, 8 lakh rupees is given. From this 8 lakh disallowed item, that is 1,50,000 we are going to deduct. So 6,50,000 is our total turnover. Now that is total taxable supply. From total taxable supply, separate tax rate will be levied for those goods which is for which sale is done within the state. Sale within the state andre 1 lakh rupees, SGST CGST applicable. 1 lakh into 18% andre 9% and 9%. In that way you will calculate, and for all remaining things one rate, that is 6,50,000 minus 1 lakh, in the sense 5,50,000, that is IGST at 18%. So this is the method we will use to solve the problem. We will see to the solution. So this will be our solution. See, total amount is given as given in the problem is 8 lakh. I told one item export we have to exclude, we will deduct it, we will arrive at 6,50,000. On this 6,50,000, taxes are supposed to be levied on this amount. Out of this amount, in the problem it is given 1 lakh rupees is intra-state supply, that means within the state. So 1 lakh is a separate tax, 9% and 9%, 9,000 each we will get, whereas for remaining amount IGST will be charged at 18%. That means remaining amount means 6,50,000 minus 1 lakh for which tax is already levied. So 6,50,000 minus 1 lakh, you will get 5,50,000. On that 18% you will calculate, you will get 99,000. So 9,000 each in case of SGST, CGST, 99,000 in case of IGST. So these are the things. If you have any doubts, you can put it in comments. Yes, so it will subsequent say one information is there, but it will not affect our solution. So this is the thing which is the second problem in today's video. One more problem we'll see. Next problem, simple problem it is. From the following information, calculate the value of taxable services and GST liability for the month of September 2019. We'll see which item is taxable and where we are going to consider that particular item. So we have to see one thing we have to remember before calculating these kind of problems. When it is interstate transaction between two states, IGST is levied. When it is intra-state transaction, SGST, CGST is levied. We'll see quickly. Services provided to the foreign diplomatic mission. See, this particular item, foreign diplomatic mission, you have to remember this is exempt under GST. So this item is completely exempt from tax. Aerial advertising, which is taxable. Now when the problem is silent, we will consider them under SGST, CGST itself. We will see if any other information is there. Based on that we have to change our assumption. So here till now no information is there, so we'll assume that the transaction is done within the state. Next, service by the way of private tuition 80,000. So it is again a service, taxable service. Speed post service, taxable service. So for all these things till here no information is there, so we are assuming that these are the transactions which are done within the state. So rate of taxation is given. If it is see, in this problem rate of taxes also is not given. When the rate of tax is not given, we'll assume that it is 18%. Why this is 18% is for the services default rate is 18%. So that is a reason. So for all we are leaving 18%. House given on rent for residential purpose, which is not at all applicable for tax under this particular category of GST. Why this is not applicable is this will come under income from house property and income tax is chargeable on that. Next, value of free services rendered to the friends. So free services are given. Free services, you can give free service, that means those services are not free for you, you have to pay 18% tax. Services rendered to UNO, foreign diplomats, UNO, all these things are exempt from tax. See, these two are exempt from tax till here. Next, certification for the exchange control purpose, again it is a service which is fully taxable. Now rate is not given, so till now all 18% rate. Secretarial auditing 18% taxable it is. Fees as a fees to act as a liquidator, again it is a service. All these services are given by CAs normally and auditing firms. Vacant land used for horticulture, remember again this item is exempt from tax. So this is a third item in this problem which is exempt from tax. Sale of time slot by broadcasting organization, that means it is a kind of advertisement related thing which is taxable. Services rendered within Indian territorial waters, definitely it is taxable. Again it is taxable. Within Indian territorial waters it is given, between two states anta kodlilla, so it is taxable. Services related to the supply of farm labor, so you are supplying laborers for the farm related work or agriculture work, then it is exempt from tax. So here together 4 items are there in this problem which are exempt from tax. One is 6 lakh, that is foreign diplomatic mission. House, which is not allowed at all. Next, horticulture, it is exempt. UNO, it is there, that is also exempt. One more is farm labor is exempt. So 4 items are exempt, one is not allowed under taxation laws. So this is the thing, we'll see the solution. Remember one thing, here rate of taxation is not given, all of these are services, so 18% tax rate we are going to levy for these particular products. That is one thing, and some of the items are exempt, so for them we are treating in that way itself. So we'll calculate taxable service as well as GST liability. So taxable service calculate ಮಾಡುವಾಗ which items you are excluding? One is foreign diplomatic mission, one is UNO, residential house, then last one is farm labors, supply of farm laborers, and one more is horticulture. These things are completely exempt from tax. So these are the things you have to remember. We'll see to the solution. So this is the solution. As I told you, all the services are taxable at 18%. Service provided to foreign diplomatic mission is exempt. All these are taxable at 18%. So 80,000 into 18%, divided proportionally, that is equally, into 2 parts. In that way we used to calculate. Speed post taxable C. House given for residential purpose is exempt because it is applicable under it is calculated under income from house property. Then UNO services are exempt. Vacant land for horticulture is exempt. Labor are exempt. Total of this column will be considered as total turnover or total taxable supply, whereas other two are GST payable. So this is a problem. In this way you are supposed to solve this problem. If you have any doubts, you can contact me or you can put it in the comment. Thank you.